Alright everyone, welcome back to our news trading session, and obviously welcome to the month of August. Yeah, obviously a lot of interesting stuff happening in the past 24 hours, but let me know if audio is coming through okay and we'll get started. Okay, audio seems to be good on my side, so welcome back to our news trading session. As per usual, this is Friday of the week, first day of the month. And this is our non-farm payroll sessions, which is our labor data numbers. All right, my name is Vito in general. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of transactions and consider all possible risk factors. And I do apologize, I really am down with a very bad flu for the week, so might take it a little bit slow here, and probably a lot of pauses as well. Okay, as per usual, there's going to be bonuses for participants, and I'll show you the promo code soon. And you should already have access to the private Telegram channel if you have attended our sessions before or you're registered through Octa's website. You should be receiving those on your emails, okay? Okay, so this is a code. It's Nonfarm 2025, valid until the 31st of December 2025. So you still have a good, 4 months to go to use the code. Yeah, this is TW deposit bonus, and I believe this is a one-time use code. So make sure you use the code when you're depositing into your Octa trading accounts. Okay, just a little bit about myself, and we'll be very quick on this one here because we have a lot to cover here. My name is Vito and I've been a full-time trader with over 20 years of experience. I've been a professional trading coach as well as technical analyst for several global brokers out there in the US, Japan, as well as Australia since 2007. My expertise is in the Ichimoku Kinko Hyo technique, which is a Japanese shouting techniques. And if you are curious about that, we actually have a couple of videos on the channel from a couple of years back. It's still relevant. So if you guys want to check it out, feel free to look up the Japanese shouting techniques. Okay. I've also been invited as a guest speaker at Trading Investing Expos across Australia, Investfair in Singapore, as well as the ATAA and the APTA conferences, which is Australian Technical Analyst Associations. Okay. So yeah, we are going to cover some theory first for those that are new here. And we basically need to understand what's really going on here, why we're looking at this data. And we'll take a look at the expected number here and, several scenarios that could be possible. And, I don't really think there's actually a lot of significance in terms of what the data is, to be honest with you, in terms of how the forward guidance is going to be. But nevertheless, it is still going to create a reaction, hopefully, because last month on the CPI number, we didn't actually get a lot of reaction to the market, and to the point we're not actually able to trade anything last inflation numbers. Okay, so let's get started with what is the Bureau of Labor Statistics. So the Bureau of Labor Statistics, or the BLS, is basically the federal agency in the US that collects and disseminates various data about the US economy as well as the labor market data. Its reports includes the CPI numbers and the PPI numbers, which is the inflation numbers, and we're going to be trading that live in about 2 weeks time as well. Okay, so within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture, and this is why we call it the non-farm payroll. We didn't just call it the payroll, we're excluding people from the agricultural sector, and this is why it's named the non-farm payroll. And the other number that we are going to be looking at tonight is the unemployment rate. So, if a lot of you guys that are new here and thought, hey, I thought we were trading the NFP numbers, maybe starting for next month, I'm actually going to start changing the name to labor report instead of non-farm payroll. Okay, but yeah, we're looking at 3 different sets of data, actually, not just one set of data, and this is basically a combination of these 3 is going to create that market reaction that we see a lot in the market. Okay, so with the BLS, at the very beginning of the year, they actually publish a calendar with the release date for the entire year, so you actually know when these releases are throughout the whole year. In fact, if you go to the bls.gov website and you check out the calendars, there's actually a link so they can actually hook up the year's calendar to your calendar on the phone, right? It'd be Gmail or maybe Apple or whatever calendar you want to use. But yeah, you can actually click it, you can download it, you can actually set it into your schedule if you want to. And basically the labor data, which includes the unemployment data, is actually published every first Friday of the month. But if it falls on a holiday, the publication usually postponed to the following week and occasionally to the Thursday of that week. Now we had a 4th of July, obviously just last month, and that was actually pushed earlier into the 3rd of July, right? I still can't believe that July was actually felt like a very long month, in all honesty, and it's good to be finally over the month of July. All right, inflation data, CPI, PPI, typically published on the following Wednesday after the labor market data is actually released. I gotta double check, but let me actually very quickly just go to the BLS website here, because I just want to double check on the numbers for August. And CPI is actually going to be released on the 12th, which is going to be on the Tuesday, so 12th of August. So that, as I said, it'll be 2 weeks, because this week, and then we got nothing next week, and then it'll be the following week after that, so it'll be on the 12th. All right. Okay, let's take a look at the non-farm payroll. NFP, it's basically a report that's monthly released by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, as well as non-profit organizations. And this needs to be highlighted so you don't get confused. So farm-related jobs not included, private household employment. So if you have your own business, you work from the home, if you are the younger generations, like doing those gig economies, or maybe even, doing social media work and stuff like that, that's not going to be part of your household employment. Okay? Sorry, that's not going to be part of the NFP, because they would consider a private household employment. Nonprofit organizations are not going to be included there as well. Now, basically the number that we're looking at in terms of the NFP figures, it changes month to month, but as a benchmark, we're looking at a number around 200,000. So anything above 200,000, we consider that to be a healthy job market and a growing economy. But if we do get the number below 200,000, does it mean like, oh, the market's going to react badly to it or not? Of course not, okay? Because the interpretation of this data depends a lot on different economic factors, as well as the context it is released in. And I said earlier, I don't think this is actually going to have a long-term impact into the macros as of yet, because we're looking at a lot of other factors here in the US. For example, we're looking at the GDP growth numbers. that was just released yesterday. Overall, I think the GDP number was actually good, and the unemployment rate was pretty much stable. Inflation not really coming down really quickly. So this number itself, the way we look at it, what does the market wants, right? Market right now at this point in time really want a negative number in there so that the FOMC might get the idea to start cutting interest rates very, very quickly. But we just had the FOMC meeting. We just had the FOMC interest rate decision 2 days ago, and they're not going to be doing anything. In fact, it's more of a hawkish push there. I put out the report on Telegram on this one here yesterday, and comments coming out from Powell basically means like, come September, we're probably not going to be doing anything anyway. So it is more of a hawkish note coming out from the FOMC's chairman there, which is Jerome Powell. Okay. So yeah, August is not going to be an interest rate decision from the FOMC, so just keep that in mind if you guys are looking for that. The next interest rate decision is actually going to be in September. Okay. All right. Now, why is this important? Because basically what we are looking at here is that it's going to impact a lot of the major currencies, right? In the short term, obviously, it's going to cause a lot of noise, right? If it's above or below expectations, those are going to be the scenarios where we are going to be expecting that the market is going to react wildly to it. Typically, when we have a number exactly as per consensus, a lot of this stuff has already been priced in. We're probably not going to be looking at a lot of price movement, which is the same scenario as the inflation numbers that we were trading last month there. Okay. Now, again, anything that has to do with the US dollar is going to exhibit this extreme volatility. So anything like the Euro USD, dollar yen, dollar Canadian, dollar Swiss, Aussie USD, GBP USD, New Zealand USD, those are going to respond to this release. Any other currency crosses out there like the Euro Pound, Euro Yen, Sterling Yen, Euro AUD, those are not going to be immediately impacted. They are likely going to be impacted from more or less a secondary reaction to anything that happens to the Euro USD, Sterling USD, and whatnot. Okay. Okay. So why is this important? And a lot of traders like to trade this, especially new ones, because they came to the thought that if they trade the NFP because it moves so much in a short period of time, that they can actually gain a lot of profits out of it. Now, obviously, this is true if you get it right, but if you're wrong, this can actually cause a lot of losses as well. And I just want to warn you guys out there. So if that's the thought that you have when it comes to NFP, don't be like that trader, because the NFP itself, to me, I've been a full-time trader for more than 20 years. I know what's going on. I coach a lot of traders as well, both retail and institutional. I think a lot of margin calls actually happen during the NFP numbers. So yeah, just keep that in mind. It's more of a statistics rather than anything else. And one of the main reasons is because it causes so much volatility in the market for a very short period of time. A lot of the technicals actually stop working. It's basically because of that volatility. There's going to be that push and pull between buyers and sellers, and for that short period of time, a lot of the normal strategies basically just kind of stop working for a bit. And that's the reason why a lot of people kind of avoided it and say, I'll wait until the dust has settled before making a decision into trading this. Okay. All right. According to the BLS, NFP numbers basically account for approximately 80% of the U.S. business sectors, contributing to the GDP numbers. We just had a release of the quarterly GDP numbers in the U.S. and overall it was good. So we have been getting a little bit of a mixed number from the NFP numbers, but generally a lot of the releases in the past, half a year or so I think it was a lot more above expectation. So and it does shows on the GDP numbers where we got the GDP numbers, you know, not really being negative or anything like that. Okay. All right, the second set of data that we want to take a look at is the unemployment rate. So the unemployment rate is calculated in percentage, and it is published by but at the same time as the NFE report. It is also done by the BLS as well. And the unemployment rate represents a proportion of the labor force that is currently not employed, but is capable of being employed. Now, a survey done on this one here is based on approximately 60,000 households. So I think the sampling size is actually not that big. But I think to a certain degree, the unemployment rate is still something that we can kind of measure, right? Because every week on Thursday, we get the weekly unemployment claims, and that would be the barometer of things to do, right? Things to look at, right? And because the unemployment claims are basically people that go to the center and say, hey, I don't have a job, you know, can I get some assistance from the government? You know, you get registered into the system, and that becomes your weekly unemployment claim. So to a certain degree, we can actually track the unemployment numbers here, whether it's actually going to be really bad or is it going to be stable and whatnot. And there are a couple of criteria for you to actually be part of this unemployment rate numbers, right? Number one, obviously, these people has to be without a job, and they must have actively looked for a job in the past 4 weeks, and they must be available to start a job if offered one. Now, these 3 requirements basically is telling us that, you know, the unemployment rate that we're looking at here is going to be taken from those government bodies that gave out this government assistance, right? I'm not sure what it's called in the US, but in Australia, it used to be called Centrelink. I think it's now integrated a lot to Services Australia, I believe. But yeah, I don't know where you're from, but I mean, if you live either in Australia, I believe Canada has that as well, UK has that as well. And the US, obviously, if you don't have a job, you can actually go there and say, hey, I don't have a job, can you help me look for a job here and stuff like that. And you're going to be part of the system, you're going to be part of the numbers where the unemployment rate is pulled from, okay? Now, if a person doesn't meet this criteria, they're not going to be considered unemployed for the purpose of calculating the unemployment rate. So if you're not employed and you also don't want to seek help from the government, they don't know that you are unemployed. That's number one. Number two, if you're illegal immigrants, obviously you're not going to be part of the numbers as well. This question was actually raised earlier this year by one of the viewers here, asking if, you know, the unemployment rate takes into account illegal migrants and whatnot, okay? But yeah, they're not. So those are going to be the criteria that is required. Okay, the third set of data is the US average hourly earnings, and I think today it's actually going to play a lot more of an important role compared to the labor numbers itself. Okay, if this one here surprises a lot. Now, the US average hourly earnings data is basically a report released again by the Bureau of Labor Statistics alongside the unemployment rate and the NFE numbers, and this measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees. And because it encompasses both full-time and part-time employees, and because this is a survey done through businesses, it includes a lot of sectors. It includes private sectors, includes even farming, agricultural sectors as well, private sectors, public sectors. Those are going to be included. Part-time, full-time, those are going to be included. So I think this actually gives us a lot more data to work with, right, including overtime earnings as well. Now, why are we looking at these numbers? The reason why we're looking at these average hourly earnings numbers is it's related more to the potential for upcoming inflation. Okay, So the logic here is that if people are actually earning more, they are likely going to spend more. Okay, it's just a very common sense. If I'm earning 2 times what I was earning last month, obviously then I have extra money to spend on. I basically nearly have twice to spend on into the market, right? So if pay continues to go up and people thought, hey, I'm actually getting paid a lot more now, maybe it's time for me to get a new fridge, a new car, maybe a new PlayStation, I don't know, right? You're probably going to spend more, maybe a new mobile phone. Those are the kind of stuff that can actually push inflationary pressures up because people are actually earning more, and if things for good gets higher, and they will say, look, I'm earning more, so I think I can cope with the inflation, so I'm just going to continue spending. Now, this relates directly to more on the inflationary side of things, okay? So that's pretty much it. Let's go quickly into the trading strategies here. Typically, people can trade before the NFE numbers. For example, they can trade from Monday until now, before the NFE is released. This is what we call the pre-NFE trading. This is basically pricing in the potential for the results here, but typically they just avoid trading during news releases. Now, the one we are actually doing tonight is actually going to be the straddle strategies. So straddle involves placing 2 pending orders, a buy stop and a sell stop, above and below the current market price just before the NFE release. If you want to know more, next week we are actually going to be doing a theory session on this one here. So if you're new, feel free to join in so you understand what's going on and whether or not we can actually straddle some of the market tonight. This way you can potentially profit from a strong price movement in either directions, but once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations, because if we didn't react quick enough, the buy stop and sell stop could be triggered and we could actually be hedged negatively as well. So just keep that in mind. Now, sometimes we would actually fade the initial move as well. So fading the move basically involves waiting for the NFP release and then observing the initial market reaction. And once the initial volatility subsides, you want to be looking for opportunities to trade against the initial move. So this one here is a little bit tricky, right? So if the market breaks up on the Euro USD, so the Euro gets stronger, typically it might not last very long. It can actually just kind of come back down in the next 15 minutes or 20 minutes back to its range before continuing to go up like per usual. So this is more of a counter trend that you would take after the release of the data. Once your spread has kind of normalized and the liquidity has come back into the market, some people actually trade against the market. They're just anticipating that the market could actually come back to the areas before the breakout. So that would be the fade. Obviously, the last one is that if you want to ignore everything, then you can do a post-NFP trading as well. So instead of trading during the release, you want to wait for the market to digest the NFP data and then look for trading opportunities in the hours or days following the release. For me, I'm more of a swing trader. I typically avoid trading on Fridays, and longer-term positions I would actually analyze that on over the weekend and start positioning myself on Monday after this data is actually released. This strategy allows you to avoid the heightened volatility during the release and focuses more on the longer-term trends that may emerge as a result of this NFP data. Okay, so regardless of the strategy you choose, you have to keep the following things in mind. You need to always manage your risk, always use appropriate stop loss orders, never risk more than a small percentage of your trading capital on a single trade, very important. Stay informed. You need to keep track of economic news forecasts and market sentiments leading up to the NFP release to make better informed trading decisions, and be very flexible. So you need to be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. Now, we got about 5 minutes here, so I'll just run through this very quickly. I don't actually have a lot to talk about here. I think tariff is still taking center stage at this point in time. I think Trump has just created a lot more chaos this morning here. But yeah, NFE numbers expect to come in at 110,000 from 147,000. Unemployment rate expected to kind of be back up to 4.2%. Last month, we actually had a surprise to the downside for the unemployment rate. We were expecting unemployment rate to remain stable at 4.2%. It actually came down to 4.1%. So this month, we're expecting the unemployment rate to basically return back to 4.2%. So not expecting a lot of noise happening here. Average hourly earnings for this one here, we're expecting average hourly earnings to potentially go up again in terms of the year-on-year scale. But the NFE is expected to come in a little bit lower, unemployment rate expected to go up. If the NFE number comes in higher than 150,000, that would be actually a surprisingly good number for the US economy. That would actually strengthen the US dollar very, very quickly. It would actually further pressure the Euro USD and the sterling as well. Okay? But I think we should focus on the unemployment rate a lot more. Okay, let's take a look at the market very, very quickly here. We got about 3.5 minutes here. And for the Euro, I don't think we can actually straddle this. We can do, one side of things. We can do a buy stop. So I'm just going to place a buy stop at 1.1460, just outside of the range that we have here. We can't really put a sell stop here because price is already kind of pushed down lower here. For sterling, same thing. I don't think we can actually do a straddle on the sterling. The dollar yen, this one here, we can actually do a straddle on the dollar yen. You can do a buy stop just about 151, and then for a sell stop, it's going to be about below 150. So it is about 100 pip range on the dollar yen. Aussie USD, again, we're not able to straddle this. This has already started moving. New Zealand USD as well. Dollar Canadian, also, we're not able to straddle this. Dollar Swiss, also not able to straddle this. Gold, I don't think we're going to be straddling gold anytime soon. I think there is actually a little bit of a range, but it's a huge range, 32.65. I'm actually pushed at about 32.80 on gold here, and just a buy stop at about 33.17. But in all honesty, I don't think it's actually a very good straddle area in terms of what we have here. Okay, so those are the trades that we have here, unless you guys are wanting me to look at something else. But let me look very quickly to the chat there. All right, good trading. Thank you. Good morning. Zoo, Chucks, how are you? Haven't seen it in a while, but yeah, it's always good to have you here. But yeah, we're not able to straddle a lot of this stuff, so I think we would actually potentially fade some of this move here. But we got about 2 minutes, so I'm just gonna show you what I'm actually eyeing out for, especially the dollar Japanese. And if we take a look at the RSI, the stochastics, and the positioning that we have here, I do expect this one to kind of break and potentially go a little bit higher on the dollar Japanese and positioning here on the dollar Japanese here. So I think a lot of what we have here points to more of a stronger US dollar, okay, from a technical perspective. Like the Euro USD, I think this one could easily slide down very, very quickly because the RSI is actually below 40, stochastic is still pointing down on the Euro here, and as well as on the sterling here. I think there's a lot more weakness going on in the market here for riskier assets, and this is not really the NFE's fault. This is more of Trump's impact on whatever that we have here. All right, we should see the market moving very, very soon in just a couple of minutes here, but I would caution you, just be a little bit more patient on some of this stuff here. So we got a Euro USD. You can do a buy stop on the Euro USD, but I don't really like going along the Euro USD at this point in time, unless the data shows something else. But from a technical perspective, I think the Euro USD and the sterling and whatnot would still potentially continue to weaken. And that would give us a hint that the number that we're looking at could actually be above market's expectations. So we'll see what happens here. Numbers coming in very, very soon, in about 2 seconds right now. All right. Dollar yen has dropped down. Must be a surprise to the downside. Okay, very negative numbers, 73,000. Previous number was revised down to 14,000, so super bad numbers here. Unemployment has picked up to 4.2%. So dollar yen has been triggered here, so I think we're going with this one here. We might see a little bit of a short-term spike happening here. The Euro USD hasn't triggered yet, but you know we got dollar yen, and dollar yen should be coming down very quickly here. And I think we're gonna cancel the buy stop on dollar yen. Okay. I doubt we'll actually see a fade on this one here, but you know it is what it is. It is coming down very quickly right now. Gold should be pushing up higher. Sterling should be pushing up higher, but you can see what's going on here. It's not really kind of knocking it out anywhere. So we'll see. Euro USD is about to trigger here. So dollar yen is in position. We got about 22, 23 pips, 25 pips right now. So if you're in the money, feel free if you want to close it out. But yeah, we got dollar yen long, Euro USD long. Sorry, dollar yen short, Euro USD long. Both are in the money right now for dollar Japanese yen as well as the Euro USD. If you're happy with it, we can actually get out from the trade if you want to. But I think there's a little bit more room to go for this one here. I'm just gonna wait for a little bit more, just a little bit more. I'm gonna be out for dollar yen. I think 30 pips on this one here is good. Euro USD, I'm also going to be out on the Euro USD at this point in time. Gold just triggered. Buy stop just triggered for gold. We'll cancel the sell stop, and we'll see what happens with gold here. Should be pushing a little bit higher. If you guys are still in the position, please move your stop loss to break even and let it run. Gold, we'll see what happens here. If it doesn't push in the next 2 minutes, then yeah. I think the next one for gold is that it needs to push beyond 33.40, 33.25. We'll see what happens here. Gold still pushing on very quickly. I think everyone is just trying to figure out what's going on here. I think last month's data, which is a surprise to the upside, was actually revised down. It was revised down to 14,000, which is actually really bad. The unemployment rate is now back at 4.2%, so it was pretty much unchanged per se. All right, so we're already out from the Euro USD, we're already out from dollar yen. If you're still in a position, please move your stop loss to break even. You scale out half your positions. I think on the dollar yen, we already saw about 30, 40 pips drop on the dollar Japanese yen, so I think it is about time to scale out a little bit and start moving your position stop losses to break even if you can. For gold, I would want to move my stop loss to break even at this point in time, but you know we'll see what happens. Just probably gonna risk it a little bit here. I'll lock it at about 33. Yeah, I'll push it at break even. So okay, so we're letting things run. We got stop loss protected. I'm risk free right now on the gold trade here. Euro USD continue to push, but this is in no way anything strong enough per se. All right, but gold continues to push on this one here. Dollar yen still continues to slide. Everything else should be bouncing up. Aussie, I don't think there's actually a lot happening with the Aussie. It looks huge, but it's not. It's actually not bad for Aussie. I think it was about 50 pips or so. The Zuni USD is still going to continue to push up again. All right, I'm happy with this one here. Approaching 1,000. Once it hits 1,000 here, I'm actually going to get out. Come on, push on this one here. I'm happy with that one. We got about 900 on that one there. So we are done for today. And this is actually the first time in a year that we've actually held a trade for less than 1 minute. And everything doesn't cause a lot of whipsaws. The data that we have here is actually not that hard to figure out. I think Trump is probably going to come in on Truth Social very soon. But you know, I doubt he'll do that because the labor market looks like it is actually in a very poor condition. The average hourly earnings is also something to take a note of. It actually went up from 3.7% to 3.9%. So people are earning more in the US right now. All right, I'm not going to be looking at a fade. You can forget about a fade happening here. The number is just 100% in line that it is causing a little bit of a problem here. The labor market kind of tightened up a little bit here. It's not in a good condition. Average hourly earnings are up, and this could potentially lead to higher inflation. Again, the combination is not a good thing for the US economy, and definitely not something that DJT wants at this point in time. All right. We might see this one come down a little bit, but probably not going to be back to the initial range that we have in market. I doubt it will actually even come back halfway through on this one here. So we'll see what happens here. It might just pause for a little bit. Dollar yen is actually, it's still in a very good place, and that's the reason why I say I don't really want to stay too long on the dollar yen here. Let me show you the dollar yen. All right, this is now back at the Ichimoku cloud, and any bounces that happens here, if you take a look at the dollar yen, you're looking at a couple of support levels as well. Now, especially this area here, that was actually a previous resistance that is currently likely going to be a very strong support for the dollar Japanese yen. So any drop down is likely going to be limited to about 149 to 148.75. I'm very happy if you guys are still in position, but if you can move it to break even, that would actually be a lot better and a lot safer as well. Okay. All right, question. Say the NFP has a bad negative report. Would this cause market like dollar yen to go better since the dollar loses value? Or will you just saw what happened. Because I was correcting as dollar yen just crashed after the release. So glad I took a short. That's good. It's not really more in the sense that the dollar is actually losing value. It's more in the perception that the US economy is not doing great. And one of the triggers for the drop that we have here is actually not the lower numbers at 73,000, but it was last month's revision from 147,000 to just 14,000. And that brings it in line with last month's ADP number, which has a surprise to the downside there. I think that was basically the trigger, pretty much it. So not expecting a fade. Either you're in, if you're in right now, you should be getting out with some of the profits there. End of the week there. Again, we're doing this just for the short term. We don't really want to stay too long on this one here. I think there's already a question whether or not we should swing it. But yeah, Euro USD, I think you should be getting out if you want to. Dollar yen also if you want to get out. Reason Euro USD is now back to 1.15. Very important key level to watch out for on the Euro USD. The dollar Japanese yen is now testing 149, so you can actually snap back up. I think it is a good drop. I think you should be getting about very close to 75 to 100 pips if you hold on to your position right about now. And I would say take it and be done for the week. Remember, the purpose that we do this new trading is actually to trade it short term. Our goal wasn't to turn it into a swing trade. Our goal was basically just to react to that short-term reaction, take it, go away. I was looking at my watch all this while, really wanting to get out within the first minute, but I think we got out in about 3-4 minutes time, and that's completely fine. There wasn't a lot of whipsaws. It was pretty much one directional. I think we had a very easy trade today. And definitely a good start. Now gold, this one here is now climbing up. I do want to caution you a little bit for gold. There's an area of concern that I'm eyeing out for is actually this area here. And we're basically right at that level there. Now the reason why, if we zoom back, that was basically, there's a lot of clusters of photo blocks building up on gold there. So this one here could have it tough for it to break above 33.40, 33.50 level. So, I really wouldn't push my luck on this one here, especially with gold here. Now, again, if Donald Trump doesn't exist, I would just hold on to my position and turn it into a swing trade. But Donald Trump is there, and today is his big day per se, basically just slapping random tariffs again, overnight, which kind of overrides a lot of his executive orders. It's really weird looking at how he runs things. But yeah, the circus is still in town. And because the circus is still in town, the ringmaster is still him. I would be a lot more cautious with the positions that I have here. Any profits that I see, I would rather take it and be done with it, you know. And let's take a look at next week, what happens, because in a very short period of time, maybe right about now, I'm not looking at any news outlet here. I haven't checked through social yet. He should be posting stuff about the labor numbers now, because that's what he did with the GDP numbers yesterday. Okay. Right, as I said, and someone basically just pointed out, can we swing it? Can we be greedy with it? I just gave you an answer for that. So the answer is actually no. I would actually get out, especially with gold here. I really doubt this is actually sustainable in the short term, right? In the long term, it might, but in the short term, it's probably not. VIX numbers, we don't have the VIX numbers as of yet, because we're waiting for the stock market to open. So we're gonna get the updated VIX numbers in basically about 45 minutes time. But yeah, I do expect VIX to probably hit 1920 today at the very least. All right. Longer term positioning on what we have here, the Euro USD, we just had a little bit of a bounce. The bounce comes off the Ishimoku cloud perfectly. Is it the best level to bounce off from? It's marginal, right? Is it the best? Probably not, because it actually created a new low. So structure-wise, the minor structure has been disrupted a little bit. At least on the Euro USD. So should we position trade this? The RSI is picking up, but stochastic is not priced still inside Ichimoku cloud. I would wait until next week before I can figure things out. Now for the sterling here, overall this is still below the Ichimoku cloud. This one here is probably not going to be too pretty as well. We're coming up with the resistance at 1.33 very, very soon. Basically, where the support 1 and support 2 weekly is going to be. That's where you need to watch out for on the sterling here. Okay, something to keep an eye out for. All right. Dollar yen positioning here. Again, if price bounces off 149, we might actually survive for the week. So it's not really done as in per se that we can actually look at this as a swing trade. I would wait until Monday before making a decision, because I need today's close to make that decision whether or not we can actually go against what we have in the market here. Okay. All right. So still pushing up, and if you guys are still in that trade, hold on to it. Just move your stop losses, start locking in your profits. I choose to step out because the initial goal was basically, if I can get out in the first 5 minutes, I would go out of that, be done with it. I'm happy with what we got tonight. But if you guys are still in that trade, good luck. Move your stop loss to break even, lock in some profits, maybe scale out the positions. That's completely fine. This shouldn't last too long. We might see a little bit of a dip, but we're to the point where I don't really want to fade this. The number is just too, it's really a negative number here. All right, downward revision, it's very significant here on the NFP number. Just want to confirm it and see if I can bring it down to you guys here. All right, here we go. Let me show you this to you here. But this is the number, right? This was last month's number. Actual was 147,000. And the July number, if you take a look at the previous number, the actual has to kind of match with the previous number on this month, right? July's number. But it's 147,000 to 14,000. So the revision, it's so crazy. It's very significant. The number itself coming in at 73,000, I don't think that's actually a big problem. But the problem that we have here is actually the 147 and the 100 and 14,000. That was basically the downward revision that causes the move here on the market. Okay. All right. Everything else still on plan right now. If you're still holding on to your position, we got out. But if you're still holding on to your position, please scale it out, lock it in, whatever, because this is a good run. especially with the dollar yen. I think you would be getting in at about 150.25, 150 level. That's a good 100 pips there. You know, you really don't want to give back that 100 pips to the market. So, you know, I would say it's not time to be greedy here. For example, the Euro USD, really don't want to be greedy here, because then we have to take into account this block of potential resistance on the Euro USD all the way up to 1.16. Sterling as well, we're now just slightly below this area here, and that's the area that price needs to overcome as well. And the dollar yen, again, as I showed you just now, the yen is to clear off this range here about 148.75. That's the level that the dollar yen is to break. The Aussies there. Gold, I think we surpassed some of the levels that we have here on gold. So this is very quickly approaching 33.50. That's the benchmark level to overcome. If it breaks about 33.50, I think there's going to be a lot of orders at 33.50. It would actually lift gold up very, very quickly. So we'll see what happens here. But at the same time, a lot of people are probably going to be looking at 33.50, and they might decide to, you know, turn that level into a take profit level, and the market could reverse very quickly as well. Okay? All right. I think this is actually really quick. You guys have any other requests for me to take a look at? There's actually not a lot to consider here in terms of what's really going on in the market. But yeah, that's all I have. I think we're done for the day. That was a very quick trade. And you can see right now, I think this is starting to pause a little bit here. Let me go into the 15-minute time frame, and for the past five minutes, right? For past three candles, it's kind of slowed down a little bit. So the gain, it's not. I'm not looking at anything sustainable. We might actually fade this, but again, with a number like that, I probably wouldn't want to fade it unless DJT said something stupid again. But yeah, the past 15 minutes, the market has slowed down a lot. You want to be asking the same question? I don't know what question you want to ask me, but yeah, what is it? Always a pleasure, Chucks. Always a pleasure. Having you here, every single time, right? We got an easy trade, so I don't know what it is, but yeah, every time you show up, it's just always an easy trade. All right, this is gonna continue to push down. I think testing 148.75 right now for dollar yen, so we'll see what happens. What do you think? Making dollar stronger for a few past few, is it deal with other country or U.S. economies which don't play a bigger role for the last couple of weeks? In all honesty, I think what happens with the past couple of weeks in terms of the dollar getting stronger, I think the fundamentals plays a lot more than Trump, right? A lot of his trade deals, if you look at the breakdown, a lot of his trade deals, some of the countries that agreed to his deal were actually considering a lot of this stuff already as part of the framework there. So Trump doesn't bring anything new, but he acts like, oh, I'm gonna bring in a lot of money for the U.S. and stuff like that. I don't think it's actually tariff. I think it's more on the fundamentals rather than anything else. That would be number one. Number two, everyone's just kind of ignoring what Trump is going to be doing as well. I think one of the biggest drivers would be the run in the equity markets that we are looking at. Those are the good runs there. So in terms of dollar strength, is it the tariff issue that strengthens the US dollar? I wouldn't say that. I think everyone just come to a realization that, any other currencies out there as an alternative to the US dollar probably wouldn't work, especially we have 4 years of, this clown probably trying to destroy that idea. So everyone is just kind of say, you know what, forget about it. For the next 4 years, I'm just gonna park my money in the US dollar, and that does brings in a lot of demands for the US dollar. So I think it's a lot more on the fundamental side rather than tariff or whatever antics Trump is pulling out for. Is it just simple profit taking? I don't think it's simple profit taking at this point in time, but if we take a look at, if you've been following the report that we have here, the Euro USD and the Sterling was basically in that phase where it needs to correct itself. So I wouldn't call it profit taking. I wouldn't call this surprising as well. I think this is just a healthy reaction. The market goes up, it has to come down, it has to correct itself. All right. Like on the Euro USD, on the Sterling here, this one obviously corrected way lower. But if you take a look at where it bounces off from, this level here, about 1.31 there, it's actually not hard to figure out why prices bounce off that level. That was a previous resistance tested as a support before it bounces back up. So this is one level to break as well for the Sterling. So I don't think there's anything surprising on how the market reacts, and not really too concerned whether it's actually Trump tariffs, trade deals and whatnot. I don't think it's the trade deals. I think a lot of traders kind of figure it out in 3 months' time that whatever Trump says, it's not. I don't know. I don't think it's actually going to last long. So yeah, Taco Trump's still there. I would say that. All right, let's have an early night for today. Let's continue with the slide here. So again, trading strategies for the NFP numbers. All right, strategy based on 2 penny orders that we just did just now on gold as well as the dollar yen. It works perfectly. Euro USD also works perfectly, even though we only choose one side. But you need to take a look at the market condition there from a technical perspective, to make that decision. Like on the Euro USD, why didn't I put a sell stop there? Why do I only put a buy stop? And why was the buy stop triggered and stuff like that, right? There's a reason for that. So if you want to tune in, please come into the theory session next week, all right? And we'll tell you more about this in terms of how to figure things out in the market, okay? All right, so this is the code. It's Nonfarm 2025. We still have a good couple of minutes. So any last minute questions that you guys have, feel free to ask. But right now, everything is just running in one direction. I don't think we can fade it for tonight. So yeah, this is the code. It's Nonfarm 2025. Valid until the 31st of December 2025. And let me know if you have any other things to request or whatever not. But everything is pretty much one directional at this point in time. All right, seeing this, you can see the struggle that we have here on dollar yen. This one here might actually snap back up a little bit. So I would highly prefer, if you guys are holding on to your positions, just be happy with what the market gives you for tonight. I just be done with it, because I think it might actually slow down a little bit here. And Sterling is now approaching 1.33 as well. Okay. All right. Good luck with the trades. If you still hold on to your trades, please move your stop loss to break even. If you want to run it, please turn it into a risk-free trade. Sterling is now testing the Ichimoku cloud on the early time frame. The Euro US is already above that level. Dollar yen is also breaking below that level now. So we'll see what happens here. Obviously, if we take a look at the levels here, I think there's a lot more room to go on the dollar Japanese into the downside here. But I would suggest, move your stop loss at least to break even. And if you can scale out, I think it's a good time to scale out. I think even if it does slide down further, you would get out with at least half of the potential volatility for this Friday here. Okay. All right. What's next? It's going to be news trading and theory practice. This is going to be next week. Have a look at the schedule, but let me know. It could be on the 5th, it could be on the 7th, but I'll just double check. But check on the YouTube channel if you want to. You know what? I'm actually going to do that right now, because I also want to make sure when are we doing that? We are actually doing it on the 7th. That would be on a Thursday next week, right? So that will be on theory and practice sessions. So I'm going to explain the advantages and disadvantages of news trading, and I'm going to show you the most profitable news for trading. And then we'll look at the strategy there. We're going to take a look at the buy stop, sell stop strategy, buy limit, sell limit strategy. Really wanting to take a look at what we are looking at before we actually start employing this strategy. Like some of the stuff here tonight, I'll say, oh, we can't do this, we can't do that. You know, we pick 3 instead of just piling up on 5 or 6 and then risking everything. All right. So that's coming up 7th of August. That would be next week, same time, same place. Good luck with your trades for this week. Have a fantastic weekend ahead, and I'll see you next week. Stay safe.